Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 7th of October. Bottom falls out of the pound as Asian markets open. The British pound crashed by the most since the Brexit vote against its major counterparts as the Asian markets opened on Friday. GBP/USD fell more than 6% in a couple of minutes before quickly recovering most of its losses. Reports suggest that the gigantic move may have been triggered by a trading algorithm reacting to a news story and amplified by very thin market liquidity at that time, given that Chinese markets remain closed for the week. The aforementioned news story were some comments by French President Hollande, who called for tough Brexit negotiations and said Britain must suffer the consequences of leaving the EU in order to save the institution from an existential crisis. Once the collapse began, pound crosses broke below several technical barriers, which likely triggered even more selling from algorithmic trading programs, thereby adding further momentum to the downfall. Moving forward, we remain fundamentally bearish on the pound given the renewed political concerns over a hard Brexit and the possibility of a widening UK current account deficit. The latest remarks by the German Chancellor, the French President and the UK Prime Minister enhance our view. As such, we would treat any short-term rallies in cable as providing renewed selling opportunities to investors. Today, the financial market spotlight will fall on the US employment report for September. Non-farm payrolls are expected to have risen by 176k, more than August's 151k. A solid NFP number is supported by the employment sub-indices of the ISM PMIs, both of which rose in September, as well as the very low initial jobless claims throughout the month. The unemployment rate is expected to have remained unchanged at 4.9%, while average hourly earnings are forecast to have accelerated. This appears to be another month of solid employment gains overall, which may reinforce the FOMC's view in the September policy statement that the case for a rate hike has strengthened and thereby add fuel to the dollar's recent rally. However, we see the risks surrounding the dollar reaction from this data as asymmetrical. We believe that a possible disappointment could generate a larger negative reaction in the dollar than the corresponding positive reaction in case of the expected solid report. This is likely the case because the market probability for a hike this year is almost 60% according to the Fed Fund futures, which implies that there is a lot of room for this probability to go down. We get September employment data from Canada as well. The forecast is for the unemployment rate to have held steady and the net change in employment to have remained in positive territory. Considering that the labor market rebounded in August following the sharp deterioration in July, we believe that further improvement in September will be welcome news for the Bank of Canada. This could reverse some of the looney's recent losses. We have three FOMC speakers scheduled for today: Fed Vice Chair Stanley Fischer, Cleveland Fed President Loretta Mester, and Kansas Fed President Esther George. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.